Welcome to Markets Now. I'm Michelle Rook with Ellen Brugler Marketing, and it was a higher day in everything but the corn market. And so, Ellen, let's start there with corn. What was the problem? Is this continued harvest pressure? And, we had a new low close for the move. Are you worried about the September low coming out?
I am concerned that we're at major support right now. On the December chart, you're within a whisker of that September low. You're also at what we call the up year's best fit low. If it's going to be higher by the December 1, it should hold in this 468, 469 area. But if we can't hold it, technically, we can go into the 450s. Fundamentally, I think it's the export sales mostly. We have been running above a year ago, but on the weekly export sales report for last week, which came out today, we were at the very low end of the trade estimates. So we're competitive on FOB prices with Brazil right now, but we're just not getting enough volume to really get the market excited. Farmer selling is pretty slim, and we need some farmer selling to feed fund buying. We're not getting it.
Yeah, but at the same time, when I said, is it harvest pressure? It sounds like most of the guys are getting a few more acres or bushels per acre than they thought they were going to get on corn, despite drought pretty widespread. And so are there a few more bushels just coming at the market than we thought?
We think there could be a few more. Our weather-adjusted Brugler 500 model has 173.8, 173.9 is the most likely yield. Our virtual corn tour was 173.9. That's usually within 2% of final. So USDA was at 173. So we're kind of bumping it up a little bit. You have to be careful with these anecdotal reports, though, because better than expected is dependent on what expected was. If everybody was kind of bearish on yield due to drought, and they're getting better, but they really were too pessimistic to begin with, maybe USDA's already got that number figured in.
Yeah. You did mention South America, and Argentina has been getting some rain. So has that been a little bit of a pressure factor for the market?
Well, I think it's helpful for yield prospects down there and helpful for getting some bushels, some acres planted, particularly in Argentina, where it's been quite dry. El Nino pattern says it should be pretty wet and comfortable for Argentina eventually. But the transition from dry season to wet season has been very slow here. We're just starting to get some rain into central Brazil. Amazon River is still extremely low, which is affecting their freight and their exports a little bit out of that part of the country. But the bigger issue, I think, on Brazil for corn is simply that prices are so low that farmers aren't making any money. And so that's limiting their interest in planting first crop corn. And also, it's probably going to keep most of the beans intact, but again, could nick that final production a little bit. And you saw a couple of private estimates this week that were nudging down 1 million tons or 2 million tons.
We did see some lower Brazilian production estimates as well. So is on the soybean side anyway. So is that what helped soybeans and rally today, or is it this continued talk of maybe more China business?
Well, I think there's some China business aspects to that. Forecasts that they might import enough in November, December to get to 105 million tons on the year. USDA's lower than that. So, that's positive from a world demand standpoint. I'm a little less excited about that simply because it looks like those beans are coming from Brazil and not the U.S. But if it does firm up the world supply and demand a little bit, crush demand absorbs those beans, makes them go away, that's a positive. And China is such a big player. 55 to 60% of all the beans that hit a vessel in the world end up in China. So what they do does matter. We do know that they are cutting their hog herd back a little bit right now because of some disease pressure. That's increasing their pork production, but it's eventually, probably particularly December, January, February, going to mean a little less meal consumption over there.
Yeah. Technically, the Jan contract actually did get above some resistance areas today, did it not?
Yeah, we punched through the 40-day moving average and kept going. We got up against the daily pivot point, the R2 resistance off of that pivot point today. That kind of stopped us a little over 1330 on the Jan. But we had been stymied, if you will, by the 18-day moving average. So technically, this was a good close. We're not overbought. We could extend it a little further here from a technical standpoint. Fundamentally, this time of year, it's are you getting the exports, and or do you think USDA is going to cut the yield? We do think that U.S. average yield could be dropped a little bit in next week's NASS report.
Yeah, definitely hearing that from farmers about their combine results. Wheat market up today, was that just short covering because we're oversold?
I'm afraid we can't find much else to talk about other than short covering on the wheat. Export sales were not good this week. There's some thinking that Russian exports might be coming down a little bit. One of the private forecasters lowered their number. The Russians have said they might not export durum for the next 6 months. That's a small drop in the bucket of their total wheat production, but for durum. But again, anything like that creates an opening. World wheat stocks are still tight as a percentage of use. You couldn't tell it by looking at U.S. price charts, but we keep thinking at some point we're going to get a rally here simply because stocks are tight and the U.S. is that residual supplier. World production is very northern hemisphere centered, though. You know, the peak in world availability is in the fall after Canada, Russia, U.S., Europe. Everybody's all harvesting. So, you know, when it gets tight is more like Jan, Feb, March.
Apparently, we haven't had a bullish enough catalyst, though, to get these funds to cover any of these shorts that they have. And it's a pretty short position, isn't it?
The funds are big shorts in Chicago. They're not as heavily short in Kansas City, but of course, they had been long in Kansas City for the bulk of 2 years. So that was a shift for them. They would appear to be a target for some asset allocation buying here. Wheat, I'm talking about. But again, it hasn't happened yet, and it's probably because we need to see that some of that fundamental demand.
Okay. Cattle market up today, an impressive close. I know the stock market was up, so that probably helped. But technically, we filled the gap area. We closed above it. So now can we keep moving higher?
I think we can. Gaps are meant to be filled, and even after we broke $6, we were thinking eventually we'd come back and fill the gap. It took us several weeks to do it, but yes, gaps are an objective. That sometimes that's all you get. Sometimes it's just the first step towards going further. We think fundamentally things are still pretty good here because the cattle and feed report, by showing all those heifers in the feedlot, basically said we're not expanding, and therefore cattle numbers, calf numbers, and eventually steer numbers are going to likely still be lower in the January report. And you know, so long term, the cattle cycle is still contracting, and that generally means higher prices as long as the economy will support it. So back to your stock market point, as long as the economy is improving or not going into a recession, then that's good for beef and pork demand.
Yeah. Now, the funds have gotten out of some of their long position here due to some of these macroeconomic concerns. So do they come back in now or not?
It's going to depend on asset allocation. You know, cattle are still fairly expensive if you look at the price chart for the last year. So it's probably not their first choice as an undervalued asset to buy right here. Right now, the stock market's sucking in quite a bit of money. You know, we saw some bottom picking in the hog market. Still haven't seen it in the wheat, but I don't think they're going to liquidate longs here, but they're probably not going to be committing large quantities at this price level.
And Hogs had an impressive update. We closed above some 50% retracement resistance areas, but was it just technical today, or was there a fundamental reason that we were up so much?
I haven't been able to pin down much of a fundamental. Exports were the main news this morning, and that they were so-so for pork. Again, China is doing some liquidation, which is increasing their short-term supply, so it doesn't make it look like they're going to import a lot of pork. You know, we are coming up on Thanksgiving. That's typically pretty good ham consumption. You've got most of that, of course, is already headed to the processor. But again, a lot of it looked like technical today. just breaking through the retracement, breaking through some moving averages, brought some more money on into the market. It is still cheap compared to where we were 6 months ago.
Alan Brugler joining us with Markets Now.